Ladies and gentlemen, welcome back to another video. I'm your host, TheDividendAristocrat, and I just want to put together this quick video to cover Google stock. I just want to go over their recent earnings release and my thoughts around it. In this video, we'll go through their earnings and we'll cover why the stock is falling after hours after announcing these earnings, even though they were very strong in my opinion. I'll show you guys my position in Google, and we'll cover how many shares I own, what my cost basis is, and my allocation of my portfolio relative to my other positions. We'll also take a look at their financial metrics, and I'll let you guys know whether or not I'm buying more shares of Google at these prices if the stock price does dip tomorrow at market open. If you guys do enjoy this type of content and are into these quick update videos, show some love by subscribing to the channel. I would really appreciate it. As a reminder, this is not financial advice, and I'm just merely sharing my opinions on this channel. So just looking at the headline right here, we can see that Alphabet shares, which is Google's parent company, are down as much as 9% after hours on revenue miss, and they're soaring AI investments. Now, before we go any further, if we look down here, Google stock is actually only down 7.75% currently. It was down as much as 9% earlier, but right now it's sitting at around a $16 loss. Now, it is hard to tell whether or not the stock price will be lower than this by market open tomorrow. We'll just have to wait and see. So the most important points from this article are basically that the company reported fourth quarter results that missed on revenue expectations, which is usually a pretty big deal, especially for these big tech companies trading at higher valuations. The company also announced plans to invest $75 billion in Capex in 2025 to expand its artificial intelligence strategy. Now, I'll give some more detailed thoughts on Capex as we get further along into the article, but basically investors are not happy with the amount that they're planning on spending on AI or investing back into the company. Any sort of Capex investments, of course, are going to eat into the free cash flow of the company. The more a company invests in capital expenditures, the less free cash flow it has remaining. Now, that's important because free cash flow is used for share buybacks and dividends now in Google's case. The company also reported disappointing cloud revenue at $11.96 billion compared to $12.19 billion expected. So we can see some of the big ones here. In general, revenue did actually miss, so $96.47 billion versus $96.56 billion, and you might say that's not a big difference, and I agree with you. I think this is an overreaction if this is the reason for the drop, but when companies are trading so high as they already are, every single miss can have a very big impact on the stock price. Now that point is going to stay true for everything else. Earnings per share were $2.15 versus $2.13, so it's actually a beat, but just a very small beat. And even when companies like this beat, a lot of times investors are actually expecting a little bit more out of the companies, and the stock price could still dip as a result of that. Now, I forget what the exact number is for revenue, but this is just a very marginal miss. We're talking like 0.03%, so I would say it's not very significant at all. Now, the advertising revenue for YouTube was $10.47 billion versus $10.23 billion expected, which is of course strong, but the Google Cloud revenue was down $11.96 billion versus $12.19 billion. And again, this is a very small miss, but Wall Street has very high expectations for Google Cloud revenue. Now, although this is a very small miss, a lot of investors are going to find this to be a very big deal for them, and that's because Google Cloud revenue is basically the fastest growing segment within Google. In terms of profitability, Google Cloud has the potential to eventually become one of the most profitable, if not the most profitable segments within Google. Any sort of slowdown or miss on Google Cloud ends up being a very big deal for the company. Overall, Google's revenue grew 12% year over year, which is very strong, especially for such a large company, but compared to last year's growth, it's actually slower than that. They mentioned right here the company's revenue growth as well as growth for its search business, its YouTube ads business, and services unit were all slower compared to a year ago. Now, naturally, investors are not going to be happy if growth is slowing down over time. Deceleration is not a good thing, especially for companies that trade at a premium. Now, I will mention that compared to a lot of other tech companies, especially the rest of the Magnificent Seven stocks, Google actually trades at the lowest valuation in terms of price to earnings ratio. Google's advertising revenue was 10.6% compared to 11% a year ago. Search revenue was 12.5% compared to 12% a year ago. And then YouTube ad revenue was 13.8% compared to 15.5% a year ago. So basically you can see that all these segments have been slowing down over time. And of course, the services business grew 10.2% year over year, but comparing that to a year ago, it's still weak. A year ago, it grew 12.4% year over year. And so this kind of deceleration is not necessarily the best sign in a big company like this. Now, I will mention that in my opinion, this is very strong growth and does not worry me about the company's future at all. All these are double-digit growth rates, which is amazing. If Google's valuation was higher, maybe like a 34 to 40 PE ratio, I would definitely be concerned, but at its current valuation metrics, I'm not too worried about the company at all. Now, another thing here is that they announced that they're expecting to invest $75 billion in Capex in 2025, and that's well above the estimates of $58.84 billion. Now, like I mentioned before, Capex eats into free cash flow, and it also eats into the ability to pay back their shareholders in the form of dividends or share buybacks. Based on the slower growth rates that we do see right here compared to last year, investors may be worried that pumping more money into capital expenditures is not actually going to result in a faster growth rate going forward. Shareholders of the company are not going to be happy if this is just sunken cost that could have been paid out in dividends or share buybacks instead. Now, I definitely agree that these investments are very high in terms of Capex, but the one thing I will say is that a lot of these investments don't necessarily go to waste. If they overinvest this year or next year, a lot of the equipment is still going to be viable for the next couple years going forward. I do trust Google's management team, and if they believe that putting more money into capital expenditures is more efficient than returning it to the shareholders directly, I'm going to wait and see how this plays out in the long term. So overall, although there were a lot of misses in this report, I still think it's a very strong earnings call from Google, and I'm not concerned about the company's future at this time. Now, since I am a shareholder of the company, I like to think that you guys find it useful to take a look at my portfolio holdings and see my personal position in Google. Now, if you've made it this far into the video and are enjoying it so far, consider leaving a like. It helps me out a ton. So my cost basis, or my average price paid, was $134.43 per share. Now, what I do want to mention is that my first couple purchases for Google were actually at around $100 and actually under $100 per share. Since then, I've purchased some more shares above that $150 range, and because of that, my cost basis has come up. The current price is at $206, not accounting for the drop that we're going to be seeing tomorrow after this earnings report. In total, I purchased 15 shares, and with dividends reinvested, I have 15.031, and the reason the number is small is because my Google position is not that big, but also the dividend yield, which we'll see in a little bit, is very low as well. In total, I invested $2,016 into this position, and right now my value actually sits at $3,102, which gives me a strong total return of 53.84% or an unrealized gain of $1,085. Now, what I did right here is I organized it from my highest total return to my lowest just to show you guys where this ranks, and currently it sits at position number 8. I've only earned $5.40 worth of dividend income, but I hope they start growing this dividend in the future because the current yearly payout is only 80 cents per share, or $12.02 for my total position. That gives the current yield a 0.39% yield, which might be the lowest in my portfolio, aside of course from my zero yielding positions, and my yield on cost is at 0.6% because my initial cost was actually lower than what it's currently sitting at. Now, in terms of allocation, my allocation for Google is at 6%, and if we sort it from the largest allocation to the smallest, we can see that it actually puts it right here at my 4th largest position. Hopping into the company's financial metrics, we'll take a quick look at this and then I'll let you guys know whether or not I'm going to be purchasing more shares of the company tomorrow. So right here, we can see the stock price performance over the past 10 years has been fantastic. There was a big dip right here, which is where I purchased my initial shares of the company, but since then it's basically skyrocketed straight up. Now, some other opportunities that I took and bought some more shares at were this dip right here this past year, but since then, of course, I have been holding off. Now, in terms of their metrics, we can see that they're all pretty strong. Revenue per share has been growing very quickly over time, and earnings per share has been doing the same, though it did peak in 2021 because of COVID. Now, the free cash flow per share has been pretty strong over time, but I'm assuming that in 2024 it's going to be hindered pretty significantly by their investments in Capex, and I think the same will be seen in 2025 once we finish this year as well. Google has been repurchasing shares at a very quick pace, and I think they recently authorized a 70 or 80 billion share repurchase program. This graph right here helps illustrate the impact of stock-based compensation on free cash flow, and we can see that although free cash flow is growing quickly, stock-based compensation is also growing fast as well. Now, the main reason for that, I assume, is to continue attracting the top talent within the United States and across the world, but of course, it's going to be eating into free cash flow very significantly. I believe it makes almost 40% of free cash flow. Now, over time, I do hope that Google starts slowing down the amount of stock-based compensation that they're putting out, but we'll have to wait and see. I think they're going to continue growing it for at least the time being. Now, the reason this graph right here is blank is because I don't have 2024 loaded on here, and that'll be the first year of dividend payments for Google, but in the next 10 years, it's going to get filled out over time. And lastly, we can see their net income margin. They have a pretty consistent and high net income margin of over 20%, and I'm very happy about that. Now, the main question, with the price being $206 currently, am I going to be buying the dip tomorrow? And I would say it depends. I do have some price targets in mind. If it dips to 190, I may consider it, but I'd be very hesitant and unlikely to purchase at those prices. Now, if it dips to 185, I'd be far more tempted, and at 180, I think I'd purchase at least a couple shares. Now, if tomorrow or over the next couple weeks it drops below 175, then I'd definitely be buying at least a couple shares of Google. Let me know down below whether or not you guys are going to be purchasing this dip, or if you have a target price that you're waiting for it to hit before you purchase any more shares of Google. As always, that does bring us to the end of today's video. I really hope you guys enjoyed taking a look at Google's recent earnings release and my thoughts regarding it. If I missed anything that I was supposed to cover in this video, or you guys had any more questions, definitely leave them down in the comments below and I'll answer them as soon as I can. If you guys are interested in seeing my dividend income for the month of January, check out this video right here. And if you guys want to see which 3 stocks I was buying last week, check out this video right here. Remember, the best time to invest was 10 years ago. The second best time is today. I want to thank every single one of you guys for watching, and I will see you in the next one.